Hello guys, welcome back to my channel, and in this video I am going to be giving you people a very massive secret that will help you become profitable as a trader. So this is a strategy I use to make profits from time to time. So I want to share with you guys so that you can benefit from it. If you have been following us on our Telegram community, you will have known that we've been making a lot of progress. We're making a lot of profit actually. So this is exactly the same strategy I've been using, and we've made a lot of profits. This trade was massive and we hit take profits with it. So we've been using this look at this one, we hit profit with it also. The same strategy. Like, look at this, guys. The same strategy, and we'll be hitting profits back to back. Profit target back. Look at this one. This one is boom, crash 300, and we'll be hitting profits back to back. Just this same strategy, guys. And that is exactly what I want to break down for you guys to understand. I want to teach you guys this same strategy. Look at this. This was when the trade was still running, and then look at the result here. Look at the result, guys. Like, it hits massive profit, 1:3 risk reward ratio. Okay, so look at this one too. That's just how it has been, guys. We've been milking the market back to back using this strategy. Okay, look at this one here. So this one, I call this one live. Like, this was in the live session, YouTube live section. So join my Telegram to know when I'm going live on YouTube, so you can watch this video. You can also always participate. Okay, so now let's return to the charts. Let me give you this simple secret so you can begin to replicate the same thing. So when I come to a chart like this, the first thing I want to do, I want to mark my lows and my highs. So this is basically the low, which is our support. That is where price reversed from. If you extend this thing here, you can see that this was a major support. Why do I call it my support? Because most people don't know how to mark their support levels. But why did I call this my support? Now let me show you how to mark your support level. How you mark your support level is that you want to look for a point where price touched multiple times. Now look at this. Got a touch here. I want you to just know how a support is formed. We got a touch here, and okay, we got a touch there, and we also got another one right here. So that is a support, and that is even what we call double bottom, and we got another touch here. We also got another touch at this point before it was broken, right? Just brief rejection before it got broken. We also got a touch here. You see multiple touches, guys. So this is how you know a support level. The stronger the touches, the more the touches, the stronger the level. Okay, so that is it. Even here also, it's another one. Even if you didn't touch it, remember what we always say: you view a support level as a zone, like everywhere around it is part of it, not just that line. Okay, so if you extend it more, you can still see it. So this is it. Basically, it is meant to be on the body, not just the wick. So you can see that's it. Even here, this is part of it. Oh shit, this is also part of it here. So this is a very valid support, like a very strong support level. No wonder price just came there and pushed back up. Now that is the first thing. We also have our trend line here that would have given us a very nice perspective of what the market is doing as well. So these are two ways we could have drawn it, but this one, the steepness of this one was too much, so I wouldn't have used this one. When I have a market with this much steep, like when I have a trend that is steep like this, I don't usually feel comfortable with it. If I don't know where to draw the trend line, what I normally do is to go and get my moving average, 50 period moving average, exponential moving average. So that's what I normally use. I'll go change it to 50, and then Yep, the color should be, yeah, this is the color. That's what I normally use. So we know where my trend line should go. Now, can you see? This is exactly where my trend line should go. You can see that. So this is the valid one. So let me remove this one. It's not valid. Okay. So when a trend becomes very steep like this, I don't draw my trend line just like that. I use this moving average. It tells me to get the real place. So this is where my moving average is, and that's where my trend line is. So let me remove the moving average. That's finished its purpose. So now I'll also mark the next high. Okay, that is next high. That is here. The body, not just the wick, the body. Okay, so I've marked it. This is very okay. So assuming let's assume that this whole stuff was not there. Let's just assume that this part was not here. These candles here have not been formed. Price has not gotten to that level. So assuming you just met price somewhere here, maybe price was still around here. And you met it, you have drawn your trend line, you have marked this high. All this area would have become what we call your trading range. This is what we call trading range, or the ICT people call it the dealing range. All right. So this space is where you should be looking for your trading opportunities. Now, after marking this, I want to still mark my levels, my key levels. Remember, focus more on the body. Shouldn't be too wide. Okay, so focus more on the body. You can see this is my key level. These are my key levels. Okay, now that the whole thing has been formed, so these are the key levels here. Now, when price is returning, it is going to be respecting these key levels as I'm drawing them. Price is going to most likely respect them, and they will tell me my entry points and my exit points. They will always tell me my entry points and my exit points. Okay, so after drawing this, the next thing I will do is to scale down to a lower time frame. All right, that's the next thing I will do after drawing this. So now I've completed it. Let me now go to the 4-hour time frame. I always start from the daily or weekly. Okay, now this is the 4 hours time frame. You can see everything is very neat and very clean here. Everything is very neat. There's no confusion here at all. You can see how price has been respecting the levels. When it breaks one level, it will come back to retest it. When it breaks, come back to retest it. Now, this is where we had that high. You can see how price broke out of it, retested, push, retested, came back, retested here, and just like that. Now, okay, I will now move this to this high. That is where it should be. That is body. You can do your adjustments. These ones, they are well aligned, so I may not need to do much adjustments. Okay, this one should come here. Okay, yeah, that's better. So these ones are okay. So no much adjustment for these ones. They are okay. So that adjust it. Now let me go to my, since my H4 time frame is very okay, let me go to my 1 hour time frame. So this is my 1 hour time frame. It is also in alignment, you see. So I will not bother myself to draw anything again because they are in alignment. The alignment is super. Okay, so now how do I interpret the movement? How do I use these whole lines that I've drawn here? I'm not an artist, so I'm not drawing for drawing sake. I'm not painting for anything. I am making reference points. I am just marking reference points where I will consider taking decisions as a trader. That is the relevance of all these levels I've drawn. They are reference points, okay? They serve as reference points. So look at this. Let me just show you how they were used or how price reacted to them. Each time price got to any level, look at this one here. Look what happens. Okay, so price breaks above it. Now your duty as a trader is to look out for patterns around these levels. Okay, your duty as a trader is to look out for patterns. You are not just expected to jump into trades blindly, but to look out for patterns. Now look at this one. When price broke the trend line, starting with it first. When price broke the trend line, it pushed up. Now, what pattern did it give you? It gave us a flag pattern. Look at it. A flag pattern. Remember, I trade the break and retest strategy. Now, look at this. Price action is king, guys. Price action is king. You must understand how price action works. And this will help you when executing your trades to help you to make the right decision. You see, when it was coming back to retest this trend line, it gave us what? A flag pattern. So it broke out and retested it. And at this point, you would have entered your trade, maybe going for 1:2 risk reward ratio. Place it below this area where it broke out. And then you can target this level. But at this point, this support wouldn't have been formed, even though you can also trace it to this side. If you had traced it to this side, you would have known that, okay, this is a support level. This is the level where price is going to form a support here. So you would have known that, okay, I should target just this high, right? So this would have been your target. And this is, let's see, this is 1:2.8 risk reward ratio. You see, you'd have taken this. And then when price hit it, price is expected to come back. Now look at when it came back, you would have just stayed away from the market. It came back, make this structure. It gave us this market structure here. So it pushed, dropped, retested this level again with this, dropped to the trend line breaking structure, and then it pushed up again, giving you break of structure, and then went back to that support resistance level rather. Now, you know, when it gets to that resistance level, it's going to drop, and then it will now break it to another level. So it dropped and came back to this level where it broke out of. You can see it. This is how you read price. So this could have been your entry point, and then you can target 1:2 reward ratio again. So we'll target 1:2. 1:2. So price broke out. Target 1:2. Okay, or maybe 2.5 for anyhow. Most times I use my Fibonacci. If I don't know what to do, I use my Fibonacci. This is my Fibonacci. When price started retracing at this point, this is my Fibonacci here. This is where price started retracing from. Okay, so I wouldn't have even taken this if I used my Fibonacci. Okay, go to my level here. This is it. You can see this level here. This is the green level here. Yeah. So this is the green level here from this 0.5. Anywhere from this 0.5 down, I can take a trade here. So price hits the 0.5 level. I can see. So we would have taken this trade. So where I'll place my stop loss, I mean my take profit rather, will be this silo or this other level here. If I want to extend it very well, I can place it there. And you can see we hit take profit as well. We hit take profits as well, and that's very easily. So price broke above this level. You can see, retested it. When it retests it like this, you want to see a pattern. Look at the pattern it created here. Dropped, pushed up. This candle now engulfed this one. You can see, we got this candle engulfing this one. We allowed it to still go up, came back to retest this level where it's made this little consolidation before. So this is a good area to also enter your trade because it's around this what do you call it, key level. So could have entered this trade. This is the below this candle, targeting 1:2, or you can decide to place it below here to play safe, right? And then 1:2 also. This or 2.5. Let's say you could have also gone with 1:3 and you still be in profit. But that sometimes I don't do that. So going with 1:2, you see, we also hit our take profit. So price pushed up, came back to the same level, this level, and got rejected. So why price was rejected, you might have also decided to, take a trade. But this, I wouldn't like this very much because there was no valid reason to enter this trade. So that's it. Price came back again here. This is the one that we can see a good reason. So price came back here, retested, pushed up, breaking this structure, and then came back. Here would have entered the trade, and this is how I would have entered it at this point. Stop loss below this low, and then targeting this high. They're giving us 1:2.7 risk reward ratio. That's it. Normally, this level has not been formed, but assuming this level was formed, that would have been my target. That would have been my target. That's it. And if I track it backward and to the left, I might also see a reason to go with that level. Okay, look at it. I might also see a reason to go with that, which is this this level here. Okay, but with it wasn't there. Let's just go with what we have. So this is how I make my decisions using these key levels, guys. So price hit this level and came back. Now look at what it did there. It hit and dropped here. It didn't get to this level. Went up after a kind of ranging there, dropped, came to our level. This would have been the best time we look for trade. Look for an opportunity to trade. Then as it dropped, you see the rejection, So at this point, I would have entered my trade. I would have entered my trade because price has rejected from that level. And it has taken out all these ones. So anyone, the people that took trade here with their stop loss below will have taken out. Then you can see, I know that since price was rejecting here and then came down, it is going to break this level, right? And go for the next level. So here I can target high. I can go for higher risk reward ratio. And this 1:3 risk reward ratio. And we are good. Again, price broke this level, key level, and it's expected to come back to it. So look at what happened. Price came back to this key level. This one would have been messy. Now, most times, the first time it comes into it is usually not the best time to take the trade. Now look at it. So it came a little, went up, came again. With this consolidation, I have good, it's a good sign that our price will move from here, right? So price pushed up and came back to this area to retest it. That's when I would have taken my trade. I want to look for these patterns. Now look at how price gave out this triple bottoms here. A good sign, and it is at this key level. And that was when price has already shown us some level of demand here. Okay, so I will pick my trade, and then this high is going to be my target, because definitely price will break out of this level. So this high will be my first targets, and you can see we hit take profits, and then price continued pushing up, went to create another high, came back, and this is it. As it came back, it actually dipped below this level. So I wouldn't just jump in. I want to see a consistent pattern. So when it dipped, it came up again, breaking this high. That is a break of structure, right? Went up, dropped, just like that. Swept this level. This would have been a good entry opportunity. You have to learn to read price action, guys. So this is it. When we got this rejection here, price pushed up. So my stop loss will be here, and hopefully from experience it will still break the next level where it tested before dropping. So I am going to get at least 1:2 or more. So targeting this high here will give me 1:2.69, and I'm good with this. So that's it. And then price has gone above this, so I wait for it to come back. So the first drop, it didn't reach. Went up the second drop, forming this level, then eventually broke it and came here. When it got here, it bounced, right? It bounced from it, engulfing this one. You can see, when I see this sign, it bounced and dropped a little, I can take my trade here. All right. So this is it. And take my trade because price has bounced from it, and I place my stop loss below the level. That's it. Targeting. Remember, this was a major high that we created from the daily time frame. This was the high, that major high. Look at it here. So that would have been my target. I failed to adjust it properly. So let me see. This was the high. Now this is where it is. So so this is it. I would have targeted probably the high, since that's our high, and this is 1:3.7. You can see price got to it and hit our take profits, dropped and continued pushing and pushed up. So price eventually returned here again. This is just how I make my decision, guys. Price eventually returned to this level where it took off from earlier, and then you can see how it rejected. There was a massive rejection before price dropped a little. So this would have been enough for me to take the trade when it decreases a little. Then my stop loss will be below the level here. And then since price has broken out of this level already, so my stop loss is going to, my take profit is going to go above it and probably to the level that it created recently. So, and this is it. And this would have given us about 1:4 risk ratio. 1:4. You can see that. That is massive, guys. Now, I will still wait to see what happens. So price came back here. I would have expected it to reverse from here, but look at how it came with speed. This is what I would have expected. That price, since price took off from here and broke this level. So it has gone here. Now, I would have expected it to reverse from here, come back here, and then go up to break this level, because if you check very well, you see that it's made equal highs. So I would have expected it to bounce from here and then break this high, but that didn't happen. Instead, price came, broke the level down, retested it, and dropped. So what does that tell you? It tells you that price isn't respecting this level at the moment. So now it has come here. What we are going to do here is to watch the price action. Now with price breaking here, it is already looking as if price is now going down. All right. So what I'm expecting now is to see either price pushes bounces from here and then goes back to this place, retest this level, that is this guy, and then break this support here down to this level, retest it again, break down to this level, then come back, retest here, and then drop, continue dropping just like that all the way down. So I am having a bearish bias now, right? I'm having a sell bias right now, but I can't do anything yet because it is not clear yet. What I'm waiting for is what I have just explained. I want to see price break this level. Okay, to go back, retest this. I will still not enter the trade. I wait for it to break this level. When it breaks it, I'll know that I have what we call double top here. All right, I have what we call double top here, and then a neckline, and then a neckline formed. So that would be my that would be the point where I'll be waiting to take the trade when price returns to it. And you can see it is in alignment with our key level. So this is exactly how I want to trade this. All right, and then I'll start riding it to the downside. Okay, meanwhile, I said I won't take here, but if price comes here and I see a good bearish setup also, because we have this, you can see we have this guy here. If I see a good bearish setup, I might also take it because it's already a resistance level. So within this level here, if I see a good sell setup, I'll take it and watch how it goes, but I'll monitor it closely. So this is just how I use these key levels, this break and retest of key levels, to make my trading decisions. Sometimes I also add trend lines to it. I also add moving average to it. I also add Fibonacci to it. So it's just subjective. Like, it depends on what price is doing at the moment. The kind of price presented before me at the moment will determine what I'm gonna do. So this is just it, guys. I have a detailed course on this, which I'm going to be teaching during my VIP mentorship classes from 2025. All right, I have just developed this course, and I'm going to be teaching it in 2025 in detailed form. Right. So this class is actually going to be free. This mentorship is free. That is the offer I'm offering you. So check the video before this one. You are going to see a full explanation of how it's going to go. So the mentorship class is actually free for everyone. So if you're interested, just contact me and I'll add you to the mentorship group. Okay. What I want is to create or to raise profitable traders in 2025. All right. I want to help traders at least to become profitable in 2025. Now, it is free of charge, but when you become profitable, you are going to pay me $100 when you start making money from the market. Okay. When you make money from the market, you pay me. So I'm teaching you before charging you. All right. So I'm going to mentor you till you become profitable. Then I will charge you $100. How do you see that? I believe that is the best offer you can get. That is the best way to go about it. All right. That is the best way to go about it. Now, this is a snippet of what the 2025 mentorship course look like. This is it. This is the 2025 mentorship course right here. Okay. So this is it. This is it. You can see the topics. I am still developing it. I'm still developing it. So by 2025, we will start. He said full detailed course on this very strategy I am using and how I find my interest. Okay. How I find my interest. This is it. A very comprehensive one. So make sure you contact me and join the mentorship class. It is free of charge. And by 2025, you become profitable and you will pay me $100 for teaching you. And then we'll make money from the market together. All right. So that's just it, guys. Thank you for watching. Please like, comment, share, and subscribe to this video. Okay. Thank you. Goodbye.